All right, welcome back, everyone. Hi, everyone. Welcome to the Rise of Millennials and Gen Z Investors, brought to you by Jewel Digital Ventures and 1337 Ventures in partnership with ASNB. Our speaker for today's session is Datin Azleen Osman Rani. Datin Azleen Osman Rani is the director of the Institute of Capital Market Research Malaysia, ICMR, an independent think tank affiliate of the Securities Commission Malaysia. ICMR studies structural trends and developments which have risen in importance on the policymakers' agenda, such as sustainable finance, ESG, and investor behavior. As part of ICMR's mandate to work closer with academia, she also sits on the Industry Advisory Board of Sunway University Business School, and recently, ICMR launched a research collaboration network as a platform to bring together researchers from academia to connect with policymakers and industry. This session will be moderated by Encik Farid Rizwan. Encik Farid is currently a global equity strategist and fund manager for PNB. Encik Farid is also the advisor to Jewel Digital Ventures, an investment vehicle set up by PNB to spearhead its digital business strategy. He has been a CFA charter holder since 2016 and currently sits on the board of directors of the CFA Society Malaysia as the vice president. Without further ado, on to you, Datin Azlin and Encik Farid.
Thank you. Thank you so much, Wei En. Really appreciate that kind introduction again. Hi, not only to our participants, but also to the guests that we have here today, Latin Azlin Osman Rani. And as Wei En mentioned earlier on, she is the director for the Institute for Capital Market Research. So welcome to the show. Yeah. I just wanted to just kind of share a fun fact when I was doing some research for this particular forum. It said that the economists describe Gen Z as stressed, depressed, and exam obsessed. So that's
Damn obsessed.
exam obsessed exactly. Yeah. So and also just to share with you, Azlin, yesterday we had a talk with ASNB,
Hmm.
and the what because the head of customer and channel management, and he mentioned that ASNB's target market was to really go after the late teens to early 20s. Yeah, so I think that is a fantastic, I think it's a really fantastic opportunity for us to talk today
Mm-hmm.
about that particular cohort itself, and I think it'll be very beneficial for our participants today. Yeah, so
Definitely.
that's yeah. All right. So with that, before we get into the nitty and gritty details, yeah, I'd just like to remind the participants to hand in to submit your questions throughout this session, and we'll be asking that to our guest today. Now, with that, maybe you could just tell us a little bit about what does the Institute for Capital Market Research do? Like, what is that? What does that entail?
Okay. Firstly, thanks, Farik, and thank you to the organizers for having me here. Uh, really happy to be part of this digital hack attack, as we call it. I've never spoken at a hack attack before, so this would be interesting. But I think Wayan mentioned something about ICMR a little bit, given the context that we are an independent research institute or a think tank, which is we're affiliated to the Securities Commission, but we're independently funded and those kind of things, right? So broadly, I think our work focuses more on overall capital market development. Uh, and what she mentioned was a lot of the areas or key pillars that we actually look at, which are important for policymakers such as SE. So one area would be, say, sustainability, ESG. But one key focus area we've been working on for the past 1.5 years would be in this segment of understanding investor behavior a little bit more.
Mm,
And the framing around that is that we want to really understand the demand side of the equation. A lot of times when we're working from the providers perspective or the providers of financial services, even say ASNB being one of them. We're looking at it from the supply side, but we're not really looking at it from the understanding the behavior, the motivations, the needs of the users themselves. So that was where we were aiming to look at. I have a few slides which is basically the results of some of the findings we've had just on investor behavior, as you mentioned, millennials and Gen Zs. We don't really go into the level of whether they're exam obsessed yet, but uh, if I have an opportunity to present some of these slides, it would be good. But if not, I'll leave it to you, Farid, how you want to take this conversation forward.
Yeah, I think the slides are would be great. Yeah, to kind of anchor this
Set
conversation.
the
So
context.
yeah,
Okay.
exactly. Yeah, yeah, set context.
Okay.
So over to you.
All right. Hang on a sec. Let me share this. Okay. Can you see the slides? Farid, I think you're muted. Can you see the slides, Farid?
All good.
Oh, good. Okay. So I won't run through all the slides. You can see there's quite a number of them, but at least the context of why we actually did the study on understanding the attitudes and behaviors of millennials and Gen Zs. And as you mentioned early on, I think this is a key sort of uh, target segment that ASNB is also looking at. I'll basically broadly, I think I've noticed in the pack that you've had, you craft out a few problem statements and financial inclusion being one of them. So I think this is a key area, uh, not just for ASNB, but obviously from a national and global perspective as well. So I hope this presentation helps with the participants, even from a research perspective. The first thing is we define the problem statement, and I think you guys have done that with your six key problem statements. What below the problem statements, once the problem statement is identified, I think what's the most important is understanding the context, meaning the user's perspective. Whoever you're creating solutions for, how do you actually make it user friendly for them? Yeah, before you start then building your interventions and testing and all that. So very quickly, from a research perspective, we focus on the Gen Z and millennials in Malaysia. And in Malaysia, they already represent over 50% of the population. And so the older millennials have already crossed the age of 40. So that will mean that they are already into sort of well into their mid to senior level career. Yeah? So we were trying to answer the following questions through our research project. First was, how are young Malaysians managing their money, and how might they be managing their money in the future? What are the challenges and issues which are faced by young Malaysians when it comes to savings and investing? And what are their beliefs, attitudes, and behavior when they think about their finances? Very quickly, we did this through a quantitative survey, which basically matched the demographic profile of our national statistics. And then we also conducted an in house qualitative interview to get more nuanced understanding of some of the perspectives that they shared. This basically represents the 1,500 Gen Z millennials that we were looking at, and they're demographically distributed as per our national demographics. Even from a household income perspective, we were looking at matching it as much as possible to our national demographics. We combine this with one-on-one interviews from a variety of career backgrounds, whether they are gig workers, postgraduate students, journalists, mid-level professionals, to really understand a little bit more or a deeper understanding of the context that they look at when it comes to savings and investing. I think this might be interesting when we looked at the survey findings, and generally from capital markets, yeah. So capital markets perspective, we excluded mandatory savings, which you think of, let's say, for instance, you have to save if you're a worker, you have to save in EPF. So we only looked at voluntary savings and investing. And we saw from our findings, 22% were not invested in capital markets at all. They might have money in the bank, but they were not basically participating in capital markets. And then 78% were invested in capital markets, but this was, we had broken it down to two different segments. 33%, which is actually quite a large proportion of the 78%, who were invested in capital markets, were purely invested in ASNB and unit trust. And then you have the other 45% who were invested in sort of more various and diversified capital market products. So as we saw and we delved a little bit deeper into the data, we could see sort of general demographic differences, household income differences, also attitudes and behavior and motivation differences when you look at between Group A, Group B, and Group C. And this is, mind you, we have to be cognizant that it's still within the same generational cohort, right? So Farid at the beginning said millennials tend to be stressed, they tend to be, exam obsessed, so this is generally how we speak about one generational cohort. But our study findings show that even within one generational cohort, you can actually find that there's very distinctive differences very quickly. Group A tends to be predominantly Malay. Household income would be lower. Income source would be salary combined with, they also require some allowances from family. We thought it was just primarily because they were from the younger group, but it was actually sort of cut across the different age groups as well. Group B, then we saw, had a higher household income, also predominantly relying on salary, but they would also have some sort of supplementary freelance income. And then Group C were more diversified in terms of race, but you have 49% who were Chinese, came from central region, had a higher salary contribution, and also their supplementary income usually comes from bonuses. So if you think of that from a higher skilled income job, right? And then when we gave them sort of financial literacy self-assessment questions, risk tolerance to assess their risk tolerance, we could still see the same sort of trajectory from Group A, Group B, Group C. Group A would be scoring a little bit lower from a financial literacy perspective compared to Group B, and Group B lower than Group C. Risk tolerance as well. Risk tolerance was higher for Group C, highest for Group C, and a little bit lower for Group B, and then the least for Group A. Yeah. So then when we asked about savings and investing behavior, we could also see that for Group A, this was not applicable to them because they were not invested in capital market products. But Group B and Group C, their behavior was that they would set aside a portion of their salary for savings. But the difference between Group B and Group C was that they also knew that Group C, for instance, also knew there was this differentiation between savings products and investment products. And so they would also know that there was a portion that should be saved from their salary for investing. Yeah? So different. So you can see the mindset is already a little bit different from the three different groups. So we went into Group A and we asked, are you open to investing in the next 5 years? And a resounding close to 82% would say yes. But the reasons they are not invested today: do not have enough money to invest, do not have enough knowledge to invest in the markets. But they would like to invest if they can have products which are very simple to understand, very liquid, easy to purchase, easy to sell. Can I invest in very small amounts? And do I have the flexibility to basically change the amount invested and all that? So I think that's something that important when we think about ASNB sort of products. Yeah. Very quickly, when we looked at income levels, we realized that it wasn't so much the very hard numbers like the household income. It was mostly disposable income. And disposable income, unfortunately, is a lot more subjective, because it really does depend on your lifestyle, your responsibilities, and and this means that we're just looking at household income itself. We need to actually go a little bit deeper to actually understand how they look at their own cash flow management, budgeting constraints, and those kind of things when we think about, for instance, financial education. Now, interestingly, when we focus just on ASNB, those who were invested in only ASNB and unit trust. So we looked at Group B, then we looked at those who were only in ASNB funds. Yeah, so this is related to our session today. 66% of those were only invested in ASNB funds. And what were they investing in ASNB for? 72% said for savings. And out of 72%, they would say they was for savings, but of course they could actually opt for more than one option. So 48% also looked at it for retirement. And interestingly, out of that 48%, you also have 41% of them who do not have an EPF account as well. So that means they are looking at ASNB as purely their source of retirement funds. When you looked at Group C, now the behavior is different. They're very diversified. So you have quite a few of them already in ASB, other unit trusts. They were also invested in Malaysian shares. They were invested in cryptocurrencies. They were invested in PRS schemes, robos, REITs. Yeah. Now, I'll skip this slide. This was came from our qualitative interviews, but very quickly, I think those who had sort of a bit of a diversified participation in capital markets like the Group C, they seem to have learned a lot of their financial habits from a younger age. They're very self-aware, and they actually create their own sort of behavioral interventions internally with themselves, for themselves, like using mental accounting and those kind of things, which we can talk about a little bit later. And sometimes they also have this sort of pressure that they put on themselves to make sure that they can actually provide for themselves financially. Very quickly, and on a whole, for the future, we looked at basically how were these new emerging trends going to impact the behavior, right? So very quickly, we saw that now the Gen Z, the millennials, obviously they are going to rely more on online channels. Trust and relatability are key. But yes, I saw one question already coming out on scams, so we can talk about that a little bit later. There's a growing traction for robo advisory. There are many of them who have actually indicated that they're already taking up freelance work, changing nature of work. And obviously, for the younger generation, there tends to be a recency bias, which means they would not be thinking so much about putting aside money for longer retirement savings compared to maybe at the mid to older level. Online channels where they prefer to get their source of information, usually internet, online. This was a survey which was done, I think, in just before the pandemic. So Facebook, Instagram, website, blogs, YouTube. I think Twitter would have come up a little bit higher in terms of ranking as of late. But generally, very much preferred online source is digitally. So this guy actually says that we don't use their real names and all that, but this guy actually says that he's been basically learning a lot about finances through TikTok, which is a very popular online social media platform now for financial education. That is obviously a double-edged sword, right? You can also be prone to misinformation when you rely on those kind of social media channels. Trust and relatability are key. So after they kind of look at some of the research outside, then they might ask their friends and family whether they are invested in so and so. So very much this is a common behavioral trait where they actually are reliant on their social circles. This also is a double-edged sword. It can be good and bad. And they do learn a lot by talking to their friends. So if they are in a circle where they actually talk about Stashaway, they talk about Luno, then they are actually become more familiar with these digital channels. So that's what happens when you're in that environment. Your environment kind of dictates the kind of conversations, whether financial conversations about finances are actually normalized in your social circle. Okay, I won't go into that double-edged sword. Robo advisory is of course getting more and more popular. Primarily, I think it is very attractive for the younger generation because they feel that the barrier to access the entry point, yeah, is actually small enough compared to seeking professional advice. So they always have this reservation about seeking professional advice because their portfolio is not large enough. They also feel that maybe some of the financial advisors are always product pushing, and they are incentivized by higher fees. This is again related to the idea that there's a lack of trust in the sort of the financial markets. Changing nature of work, as I mentioned, there's about 34% and 27% who are already taking up a part-time job or a side hustle, or already taking on a freelance role. And this was pre-pandemic, so I'm guessing these numbers would actually have risen in the last 1 year or so. Okay. Um, Okay, so these are basically some of the results from the qualitative interviews about how they make their financial goals. Some of them are gig workers, and obviously they are faced with a different set of challenges in terms of irregular income and those kind of things. Yeah. Financial goals, again, with the younger generation, we saw that there was not a lot of emphasis from a retirement perspective, but they had different goals, right? So 61% aims to buy a house in the near future, 60% wanted to buy a high priced item, 55% wanted to make basically very quick profits to get higher returns. And then those who were already married had different, obviously, financial priorities with the kids' education. And out of this, about 42% were looking at saving for retirement. So overall, I'll end in a couple of slides. I think the main takeaway for this is to just set the context of how we should look at different considerations for different groups. So when we talk about financial education programs, financial literacy, we have to understand the barriers. So here we've outlined about at least three different groups. There could be more with further studies, but at least one group which is not even participating in capital markets. You might think of this group who are completely excluded. They've probably not even opened an ASNB account. They have very strong reservations about participating in a savings in ASNB, for instance. And then you have Group B who are invested only in ASB products. Would they need a different kind of financial education? How do we encourage them to actually invest more? And then you have Group C who are already, quite risk takers. They're very diversified, but also could lead to overconfidence and lead them to actually be more susceptible to scams, for instance. So very different kind of approach. And then my last slide, I think this is my last slide. So really overall, knowing all this, how do we really think about savings and investing for the future? I think with ICMR, we do heavily place a lot of recommendations on using digital tools and also leveraging on behavioral approaches. So digital tools, I think with Hack Attack, you have all your participants really thinking of it from a digital solution perspective. So I think that's great. How do we then include on these platforms, knowing that there are different barriers and challenges to savings and investing? Yeah. So, and can we create tools to help them build a savings habit, which are flexible and can be integrated into their daily lives? Now, again, like if you think about Group A, they would need very small, very flexible very liquid kind of savings, which ASNB itself is already a very, very, good product. But maybe they're not so aware how they can actually basically contribute in smaller amounts. And goes back to the behavioral side, because generally speaking, I think if we say, just open an account and put in 1,000 ringgit, for them it might be quite a large amount of money, especially if they're not earning a high amount. And then there's also this new concept, well, not relatively new, not so new in other markets. I think it's already been rolled out. This concept is called the sidecar savings concept. So the idea is that for a lot of the lower to medium income households, uh, they would not want to invest in anything which has restrictions on, say, for instance, the amount that they can withdraw, um, retirement savings, or even you can withdraw from ASNB, but up to a certain amount. You can withdraw up to a certain amount online, and then after that you have to go to the branches and get money out, right? So the idea is that they don't then identify that as easily accessible, because they need a certain amount of emergency savings. And the sidecar savings model really determines that you can put a certain threshold for your own comfort of what you feel is sufficient emergency savings where you can withdraw. And over and beyond that, then you kind of basically facilitate them to think more longer term. But once they can only start thinking about longer term finances and compounding once they can actually have that basically easy access to an emergency savings pool. The other part about behavioral economics is really you want to go back and think about how to leverage on the EAST framework. The EAST framework is simple. It's just basically everything that you think of from an intervention digitally, make it as easy as possible. Make it actionable, social, and timely. So easy could be something like where you use basically defaults, that they don't, it's automatically, you allow them to actually put 50 ringgit a month automatically from their payroll deduction, for instance. You want to create something which allows them to save and then forget about it, and then it gets automatically. I think you already have something like that. So when you think about more digital solutions, I think keep going back to how you want to make it as hassle-free as possible for a lot of the users. And then you want to make it as basically as actionable as possible. Is it sorry, it's not actionable, I think it's the word is attractive. So you want to make it attractive. Can you personalize it for the person? Can you put in some incentives? Social framing is where they look at how we think about likes and ratings and all that. So we are really social animals. So again, leveraging on the community part and making it very social. And timely makes it, you have to make it very simple and timely that they can actually decide to do it then and there. So I'll share with you, like for instance, one of the fintech companies, not fintech, I think it was one of the gig platform companies, which had already included a very simple infrastructure to allow for their workers to automatically put a certain amount as and when they wanted into an automatic savings account and also to EPF. Just by deciding through a toggle, if they had, say, for instance, a higher income that day itself, they can automatically just decide to put it into one of the accounts, either the savings account or the EPF account. Okay, so now on financial education, I think we all know that it's critical. I think it's more the question of delivery on how to make it more effective. So I think everyone here is really looking at it from a digital platform perspective. Can we also include, for instance, just-in-time financial education, meaning that at the point of you making that financial decision, you actually have some prompts that actually talks about, say, investing for the longer term, compounding, or something like that. goals based investing is something that I think a lot of globally, I think that it's being further explored in terms of helping someone reach a certain goal before they can actually. Once they reach that target for a certain goal, for instance, financial education, then they can also you can incorporate a lot of prompts about financial education. I think I don't want to take on more time on the slide, so we can go to Q&A, right, Farid?
Yes, that's right. I think that was, thank you so much, Azleen. That was a gold mine of information. You not only talked about everything from the differences between the cohorts to the types of capital market products that they do invest in. You even gave us some tips about, how to address some of the challenges here today. Yeah. So with that, there is the first question from the audience here. This is the most upvoted one, which was, I think you also touched on this a little bit previously, but if you could elaborate a little bit more about how do you divert the mindset that investing are scams, via financial literacy. What are the tips that you kind of have off the top of your mind?
Is this a question? Because just to clarify, the question is basically saying that Gen Z thinks of investing as scams.
Yeah, I think more like the impression that investing some of the investing schemes out there are fraudulent in nature. So how can we at least educate the public about the difference between fraudulent schemes and actual investment
Mm,
schemes?
mm. Okay. We actually have some research which we are doing, which is work in progresses. So the report's not out yet, but I can share some preliminary findings a little bit on where we are looking at is more vulnerable investors, right? And we looked at it not just for millennial and Gen Z, and we looked at it up to the age of 70 from a nationwide perspective. And the susceptibility to being scammed is not something which is unique for the younger generation. We saw that even the older generation are susceptible to scam. So it's
Mm,
not so much a mindset of the Gen Z specifically uh, thinking of investing as scams. So again, they don't discriminate. Basically, uh, if you're older and you're also susceptible to certain scams. And then right at the beginning, Farid, you mentioned things like, um, mental stress and those kind of things. Interestingly, we also find that one of the sort of relationships we saw was that if you were having some situational issues, challenges, and it could be a mental stress issue, whatever, then you have a higher propensity to be susceptible to certain scams. And so this is why literacy in financial education programs is critical,
mm,
because you want to ensure that people know what is a realistic kind of financial investment.
mm,
What are the red flags to look out for? Which sounds, if it's too good to be true, potentially dig deeper and ask yourself whether it could be scams. And this should be done at a very early age. Now, if we think about even school going children, I think conversations about finances have to already be normalized into that age group. If you start from a very young age and all you think about is investing is a scam, then you're already operating from
mm,
the other spectrum of the mindset, which is let's not do anything then,
mm,
which means you can't go into sort of helping yourself with building your own financial resilience, getting yourself to a better stage of financial goal, wealth accumulation, and those kind of things, right? And so ASNB kind of products are very well suited to basically go out and present to people that these are safe products. So if you don't know anything at least about capital market products, say you're in group A, then you should start to think about how do we incentivize or get these at least group A go into a safe platform like ASNB. So I think ASNB has a very, very critical role. You want to get them there. Once they are comfortable investing in ASNB, understanding, because even I think one of the things is ASNB is a great platform, but you want to at least get all the ones in ASNB to also understand a little bit more about the returns they're getting,
Mm,
about the market conditions. So then that enhances like how they actually understand what financial well-being actually means.
yeah. Yeah, on that note, I just want to follow up with a question on financial literacy, and I hope that this will kind of help the participants to customize their content later on. But do you see any difference in level of financial literacy between millennials and the Gen Z? Or are they both financially, in general at least, financially illiterate?
I have to say, from the results of the survey, I think it was uh, I don't think we had enough respondents to make a conclusive remark from the Gen Z community,
Mm,
primarily because the respondents were at least, I think, minimum age was probably 20 over.
mm,
So we were looking for a target of that segment. So it would representation wise
mm.
represent a bigger group from the millennials. So at this stage, I don't think it's fair for me to make a remark about whether it's between Gen Z and millennials.
I see.
But overall, I think the findings of the research actually shows that even within that cohort, let alone two cohorts that you want to separate out, you'll have very distinctive characteristics.
Okay, understood. That's great. Let's move on to the next question, which is about digital assets. I think there are two questions here touching on digital assets. Uh, Essentially, I think the common thread between these two is that what do you see in terms of the growth of digital assets? That's number one, and the second one is what do you think attracts these two cohorts, millennials and Gen Z, towards a new asset class such as this?
Yeah. Yeah. So digital assets is the new sexy stuff
Mm,
in capital markets, and it's also very innovative, very new, and it's also very attractive because I think with the younger generation, everything is accessible at their basically through their phone. So a lot of these digital assets, you don't, if you're looking at it from I'm just looking at it from generally why they would be quite attracted
mm, mm,
something like digital assets, right?
mm,
Firstly, it's not something which is it's globally available, and I think you can get information about it everywhere. So it's widely accessible as well, and a lot of them look at it more from a speculative perspective.
mm,
Uh, so quick money, very interesting. There's a lot of there's you don't really a lot of them. I don't know whether they go into really heavy duty research on the different kinds of cryptocurrencies
mm,
in the digital asset space. Mostly, I think they're just looking at the price generally, the price movements. So I think that is very attractive for millennials and Gen Zs because technology is in their DNA.
mm. True.
So it's so easily accessible. They understand it. I think a lot faster than people in the older generation that actually have to look into go through a quite heavy duty research to actually look into these kind of things.
True. In a way, they can kind of relate to it a little bit better, right? Because they kind of, or at least they feel that they understand the underlying tech, right?
Yeah,
Yeah.
and then
So,
there's usually no financial advisor that
true.
you have to meet. You don't have to meet a unit trust agent whom they don't trust anyway. So it's
mm,
very much like we mentioned, trust and relatability are key.
mm,
But it's not that they're trusting the sort of the financial advisors. They're
mm.
trusting more their friends, and so it goes back into who are they mixing with in their social circle that's talking about these kind of digital assets.
I think this is also related to what you presented earlier on about the way that they educate themselves, right? Which is mostly by the social group that they are in, right? So I think that's something that would be quite important, I guess,
Mm.
for our participants to be aware of. Yeah. How about the next question? Let's jump on to the next one. This is, I think, quite important. Are you aware of any government policy that is currently in play that improves or is targeted towards improving financial literacy at this point in time?
Oh, okay. The well, yesterday, I mean, today, I think they're still having it.
Mm,
We have the Financial Education Network Symposium. I think PNB is part of that Financial
mm,
Education Network,
mm,
and they're doing a lot of initiatives and programs around financial literacy.
mm,
Specifically, and like I say, our study was on Gen Zs and Millennials, but I think financial literacy is really needed across the board
mm,
for all generations. So there's a lot of initiatives on financial literacy. Having said that, we at ICMR we work with our partners in Japan and those kind of markets, even with what we would envision as a very developed market. Financial literacy is always an ongoing policy agenda.
mm,
And one of the reasons is because, especially when you talk about digital assets and capital markets, savings, investing is fast evolving. There
mm,
are always going to be new products. There's always going to be people who are, the scammers becoming even more sophisticated. So financial literacy is not something which you have an end policy goal.
mm,
It will always have to kind of evolve as the markets become more complex, more sophisticated. And
mm.
that's why understanding the different behaviors and how do you incorporate this into the solutions that the participants are going to create is all very, very critical.
Oh, that's great. Um, Earlier on, when you were describing ICMR itself, you said that a lot of your work focuses on, market developments, especially surrounding sustainability,
Mm,
ESG,
mm,
right? And also globally, we see a trend that this is becoming increasingly important for Gen Z whenever they are, formulating their investment decision. But that's global and mostly in the developed markets. Do you see that trend happening here in Malaysia? Do you think that the Gen Z, the millennials here in Malaysia, will move towards that same situation?
with ESG investing?
Yeah, using that as a criteria when deciding on, where to invest, how to invest.
Hmm. Mm. Okay. I think one of the questions, I don't know whether I had to quickly go through them. It probably didn't go into it so much. Was on ESG investing, millennials and Gen Zs. Interestingly, in Malaysia, the while those of us in capital markets think like ESG is like a very well known term,
Mm,
everyone should be familiar with it. But actually, the millennial and Gen Z that we were interviewing and spoke to actually didn't even know what ESG actually meant.
mm,
So there is still a need to broaden that awareness. And when we basically explained the concepts of ESG, they did agree that that was something they wanted to do. But again, this was primarily coming from the Group C
mm,
people, yeah, who were already probably looking at diversifying their investments into
mm,
various financial products. So really, what we're looking at is structurally, you have those who don't have enough money, and these are not something that you can basically have interventions purely from a market-based perspective. We do have to look at it from more a holistic perspective.
mm,
Look at why some the levels of income is not sufficient to actually get them to even participate into savings and investing program, or
mm,
just the mindset about it, right? So I think there's a question from Azrul: how do we reconcile asking people to save more at a time
mm,
when their purchasing power is decreasing,
mm,
which is a very very pertinent point. Uh, and the way the study shows is that the different the different segments, even though their household incomes are low, the
mm,
way they manage their money is also very different. That's where your disposable income comes in. A lot of times we find that at different levels, the financial education that you would need would be very different. So if coming and targeting a particular segment, say they're not investing at all, then
mm.
you might want to come and target that financial education program just purely from cash flow management.
I see.
You think about disposable income is primarily cash flow management. Are you managing your income, not taking in too much debt, and then
Mm,
managing the expenses? And just that basic concept is enough, right? And so creating and facilitating them, whether it's through digital tools, which allows them to think about just putting extra, maybe 20 ringgit a month first, 30 ringgit a month first, 50 ringgit a month first, is already sufficient for now, because
mm,
you want to get them into a habit of building that savings first.
mm,
And then you have the different levels. They might have a higher disposable income,
mm,
and how then do we actually get them to think about investing over the longer term? So
mm,
then your education, financial education, then becomes a lot more catered to them.
mm. Yeah, on that note, Jewel Digital Ventures, there is this, what can I say, we have a subsidiary called Raise, right? Raise,
Mm, mm.
which I think tries to introduce the concept of micro investing, right? But just wanted to know, because you've conducted these surveys, uh, especially amongst those who mention the difficulty in terms of investing, had they ever considered micro investing as an alternative in your conversations with them?
I think that's what they need, but they don't know where to find them,
I see.
right?
Okay.
So when we ask those questions about what kind of products do you actually need,
Mm,
specifically, they would say very small amounts, which
mm,
is micro,
mm,
very flexible.
mm,
We need to be able to withdraw them
mm,
again. And then if you think about that behavior and mindset, yeah, um, it goes back to what I mentioned about the concept of sidecar savings. The
mm,
sidecar savings is this two-prong model.
mm,
The first is you have to at least get them to feel comfortable that they have a buffer for
mm,
emergency. And that amount is discretionary. It's different for you, it's different for me, it's different for the other person. So allowing them to determine what is the amount that they feel is comfortable that they can access in the case of an emergency,
mm,
and allowing them to make it as frictionless as possible to be able to manage that part of the finances.
mm,
Once they hit a particular target, say their emergency buffer, then you might want to include the option to allow for them to go into using uh, a commitment feature,
mm,
right? And there's studies that are being done here in the Philippines and all that, where up to a certain level, once they have the emergency buffers, then they
mm,
introduce a commitment feature where you actually incentivize them to keep putting in money every single month without withdrawing until they reach a certain target or a certain date,
mm,
right? So then you're kind of moving them from the trajectory of having an emergency buffer, cash flow management, to now thinking about savings and investing for the longer term, the benefits of compounding. So
mm,
it's really like building them into the different levels from an education perspective.
mm,
And I was at a workshop with Raise, And I
mm,
thought, it's a very easy product to use, to just basically, go whatever you spend, you can kind of just round it up and basically put it as micro investing. And I'm pretty
mm,
sure, I think they would be it's a very useful product, but we need to just broaden the awareness to the people who actually need that kind of product.
mm, mm, mm.
And speaking of race, I remember, I think, asking the lady who was there about whether or not there was going to be a race. I think she said there's a race junior,
Yes.
but which is still under parents, something like the parents actually monitor it, something like that. And I thought that would be a very good platform to start with the financial education side.
Yeah.
And with children, then you can start with very small amounts just to understand the concept of savings and investing, and then introduce things like gamification, where you win
Mm,
certain things when you actually invest and reach a certain goal.
mm,
So I think financial education is critical. It's just the way we deliver it in one. You have to
yeah.
rethink that.
That's great. Um, we have two questions which I think can be kind of bundled together also, which is the thin, we call it the thin red line between investing and saving. And then there was
Hmm.
another question also talking about investment with low capital requirements, such as touch and go,
Hmm.
right? Go plus. So I think in the case of a product like touch and go plus, in your opinion, would you categorize that as along the lines of saving, building up that sidecar that you mentioned earlier on, or is it I does it fall under the umbrella of investing, in your opinion?
Um, yeah. So there is that thin line.
Yeah.
I agree with you.
Mm,
But I think it's also the it's more the mindset you go in when you actually look at these products, right? For instance, a very quick example. Let's not go to touch and go yet.
mm,
ASNB itself,
mm,
in capital markets, we are regulated. The funds are regulated by SC. It's seen as an investing product. But from a behavioral perspective, we see that a lot of people who contribute to ASB and put in their money
mm,
actually use it as a savings product,
correct.
right? Now, so that means they're not looking at it from really leveraging on the benefits of putting in ASNB as an investment product.
Mm,
So we have to be realistic in terms of we understand what is it that they need ASNB for. So yesterday at the FAN symposium, the EPF actually presented and said that at the point when they allowed everyone to withdraw
mm,
from EPF, a lot they saw an uptick and in the amount that was invested in ASNB or tabung haji,
mm,
right? So that's basically taking it out and from an investment that ties you up for retirement.
mm,
And when they are feeling stressed, there was COVID and everything, you allow them to withdraw. They're
mm,
not just spending on anything, but they're putting it into a vehicle which allows them to access it anytime, right?
mm,
For ASMB. So they
mm,
saw that as a very liquid savings feature. Now,
mm,
from a technical standpoint in terms of how the product is regulated, how the product gives its returns, we look at it as an investing feature.
mm,
So there is that thin line. But I think when you want to design some solutions, I think you have to go back to the users and how they actually perceive it, and then for ASNB to realize, okay, this is the segment, the target segment that are using it for savings and not for investing.
mm.
And then the problem statement is: do we want to encourage them to actually invest more, or do we actually want to just allow them to treat it like a savings product?
Understood.
Yeah.
We have about 5 more minutes. Unfortunately, time flies when you're having a great conversation. But can I just sneak in one last question? I think to touch upon something that you mentioned earlier on, gamification.
Hmm.
Right? I think that's also something that most of the participants here would be not interested to kind of introduce. But on one hand, I'm just trying to play devil's advocate,
Hmm.
right? Gamification, in some ways, also encourages over trading, right?
Mm,
We've always heard the fact, that you should always think for the long term. You should always invest for a long period of time, just dollar cost average and so on and so forth. But gamification, kind of turns that on its head, right? So, in your opinion, how do you kind of balance between those two? Yeah, investing for the long term and at the same time, potentially introducing a feature that is negative for the investor.
mm. Okay. A very interesting question, Farid. I look at gamification as being cognizant with the behavior of the younger generation. That's the way they make decisions, they frame things, right? So gamification can come at multiple levels. Uh, in terms of engagement, say just purely from financial literacy, financial education perspective, you can also include gamification. You know,
Mm,
but it does not necessarily lead to sort of very speculative trading.
mm,
So gamification, I think, is a broad term that you would have to obviously be a lot more granular in terms of how do you actually then apply gamification in what context.
mm,
And I think when you talk about gamification in terms of does it encourage, more short-term trading, those kind of things, I think that's more like the simulation side
mm,
of the trading environment. And I'm not so sure whether that actually really falls into where we're talking about gamification to encourage them to be engaged in financial education, just win some small awards or something like that, as opposed to
mm,
really, taking action and trading in the market.
mm,
Trading in the market, I think I'm there it's already being done. It's not through just gamification. I'm talking about gamification, I think, from my perspective, is a lot more from the engagement side.
understood. Yeah, maybe like just trying to engage them to educate themselves. That's where
Yeah.
we need to focus these gamification efforts
Mm,
in. Yeah. All right. With that, I think there was also a lot of requests for your slides,
mm.
right? So we will. I think the organizing committee will work on making those or at least helping the participants in that respect.
Yeah, it's actually all on our website, so you guys can go to www.icmr.my. It should be under financial inclusion pillar somewhere.
Oh, fantastic! All right. So with that, thank you so much, Dr. Azleen. I think that was a fantastic conversation. Is there any last words that you might have to kind of wrap it up in the last minute that we have?
No, I wish everyone all the best. Very excited. I think you guys are working on, very, very great problem statements, and I look forward to seeing what comes out.
All right. Thank you so much.
Thank you.
Thank you.
Great. Thank you so much, Datin, Azleen, as well as Anjik Farid, for your time today and for the really interesting session on the rise of millennials and Gen Z investors, especially on how we can reframe investing for the younger generation. Hope that all participants will be able to apply this knowledge in your hackathon projects as well. And thank you once again.
Thank you.
Thank you.
Thank you. All right, to all the hackathon participants, we have come to the end of our day two of our pre hackathon workshops. Thank you so much for joining us for all our workshops today, and we will see you again tomorrow for our next series of workshops. Bye, everyone.